hasn't gone anywhere from there. But look at two-wheelers. That's where you're seeing the big blowout move, be it a Hero MotoCorp, which is up 3.25% right now, or a TVS Motors holding up 2.5% as we speak. And some very other interesting movers which are making a move after a very long time. Look at a PG Electroplast up 2.5%, REC up 2.25%. And then, of course, there's Idea as well, which is holding up almost 3% as we speak. Within the large caps, Hindalco, Asian Paints, Maruti, Geofinance as well as BEL, they are the ones which are in the lead. But of course, look at ITC, for instance. That's down about almost 4%. Axis is lower. Titan is a laggard. And then Bajaj Auto also, which is seeing weakness along with Interglobe Aviation. But of course, a very interesting juncture in India's market history as Sensex turns 4 decades old. So who better than Mr. Sundaraman Ramamurthy, the MD and CEO, to share this moment with us. Mr. Ramamurthy, great to have you on ET Now. And firstly, wishing you and your entire team at the Bombay Stock Exchange a very happy and prosperous new year from all of us.
Thank you so much. Happy New Year to you and your viewers.
Thank you. And let's talk about what a momentous occasion, Mr. Ramamurthy. Given that Sensex has now completed 40 years, how do you view its legacy and its continuing relevance as India's market benchmark?
See, market indexing is one of the very old activities and it has been happening for many decades. The relevance and continuation of a meaningful existence for an index stems from what is the methodology of its construction, how nimble-footed it is to change along with the market changes, and what is the methodology of reconstituting it at periodic intervals. If you look at it in that fashion, even the methodologies have been undergoing a change. Sensex has been keeping pace with every conceptual change in index constructions that was happening in the market. And because of that, today it is a free float market capitalization index, has a clear methodology of reconstitutions, inclusions, and exclusions. And while it is 30 stocks, it represents around 40% of the total market capitalization of the country. And around 11 sectors of the 12 sectors has a wonderful correlation with multiple stocks. If you randomly create and check, that means it has very limited amount of diversifiable risk left over in it. And there are a lot of ETFs and index investments happening on Sensex. That's why probably today, if you look at it, Sensex is in the hearts and mouths of everybody who talks about the market. If anybody wants to talk how the market is going up or down, they take the Sensex numbers and then discuss about it. And Sensex is more like a family. What do I mean by that? It has old age stocks and it also has new age stocks. Like in a family, you have great grandfathers and great grandmothers and also great grandchildren and their children. That is why I think probably Sensex continues to remain relevant to the market.
Okay. And Mr. Ramamurthy, also give us a perspective. What was the strategic thinking behind buying out the S&P Dow Jones stake in the index company, and how important is the index business per se to BSE's long-term vision?
See, some of the areas as far as MIIs are concerned should be driven by policy objectives more from a business money-making objectives. For us, of course, ultimately you make more money when you are adhering to the objectives, larger objectives. It becomes a corollary and not becomes a primary driving factor. For us also, the acquisition was more from that perspective. If you look at India today, it is growing at a very fast pace and capital formation is very important. The contribution to the capital formation already has started happening and it should happen more. Should be from all the citizens of this country in small or big ways. If they have to contribute to the capital formation through capital market, it is better that they come through index investment or mutual fund investments, which also uses index. So index becomes a very important mechanism through which you develop market, you penetrate market, and therefore help in capital creation and the larger economic objectives. Of course, it makes a lot of business sense as well. So when I joined, I found that 50% of the stake is outside India. The management control of the index company was not with BSE. In such a situation, in an evolving country like ours, where quicker decisions and faster decisions need to be made as to what relevant index we should introduce now, what changes we need to make, it's not going to be conducive if you don't have 50% of shareholding and if you don't have management control. This was the thought process, and understanding this important function of the index in capital formation of the country, we went ahead and requested, and we were fruitful in getting the 50% shareholding and management back to the Indian shores, and we are currently managing it as a 100% subsidiary.
Okay. And the turnaround, BSE has been a clear turnaround over the last 3 years. Excuse me. One, in terms of leadership, but also in terms of market share recovery, right? What were the key actions that have driven this change? And can it sustain, sir, is what I'd like to understand.
It's a very good question you're asking. See, a company, after 5 decades of its existence, not creating much benefit to itself in terms of P&L and all. If it has to turn around, there has to be some strong factors in the market which we need to look at and catch up on. Typically, one point I have always been making is if you identify a gap and fulfill it, you have a right to exist. So when I joined, what I found was there was a serious concern in the market participants' mind about the concentration risk. That was one point which I took note of. And second point was there was a huge amount of gap in terms of product, services, and approach to the service that is being provided in the market at that point of time. So keeping that in mind, the strategies that we envisaged was to make BSE vibrant, to deepen and broaden markets for BSE, and customer delight. With these three, when we looked at it, it came into the clear action points. For doing all this, you require money. So therefore, think about all the unwanted costs. How do you cut them? So cost optimization, capacity formulation. There were 300 posts that were vacant, which were not fulfilled for various reasons. They have to be fulfilled, otherwise the employee morale will be bad. Capacity creation in terms of technological capacity. We were processing 10 crore orders in derivatives segment at that point of time. Today we have a capacity to process 1800 crores of orders per day. We process 22 lakh orders per second today. It has been a major shift. Then all the peripheral systems, so capacity building. Then came listening to the voice of the customer. Then came product differentiation. We brought in Sensex derivatives. We did certain things with pitch size changes and all in equities market. Some results, some no results. Last but not the least is the market participants were talking about lack of level playing field due to various regulatory situations at that point. We took them to the regulators. Regulators were kind enough. They looked at it, and wherever they felt that what we are talking is making sense, those changes were brought in. That was the other thing. So these are some of the factors, if I look at it today, off the cuff, if I have to tell, these are some of the most important factors that contributed for the turnaround. Along with it, the organization culture changed. From being called as a service provider, I always used to tell them, you should call yourself as a person who is ready to serve. Being a service provider means as if you are having an upper hand. Ready to serve means that you are subservient to the needs of the market and to the regulators, and you are ready to take it forward. An attitudinal change with the humility to go forward and help in people identifying their gaps and then filling it is what I think is the reason for BSE's turnaround. There are a lot of things that we have done to ensure that it sustains, and there are more in the offing in the coming months.
Mr. Ramamurthy, the other thing I want to talk about is how the year gone by has been, right? And we've seen a lot of derivative market changes. And we've seen very frequent changes as well, sometime in expiries, in trading days over the past year. How do you assess their impact on market quality and risk? And more importantly, F&O volumes as well?
It's a very good question you're asking. If you look at it, while the Indian capital market is one of the very old markets. The birth of regulator happened only in 1992. So there has been a wide gap there. So the regulatory system in India has to catch up fast. They have to catch up and they also have to be the world's one of the top regulators, which they are today. How do they achieve it? They frequently review what they are doing and they also ready to listen to the market feedback. They are not unilateral and dictatorial. Under their overall umbrella requirement of protection of investors' interests, they co-create orders. So while we are talking of frequent changes in derivatives, derivatives market in India is fairly new. It's just 2.5 decades old. So therefore, it has to evolve in a big way. Sometimes evolutionary processes are painful. It was painful last year because there were a quick succession of changes, but it was not out of the blue and dictatorial. It was clearly after due consultative process and with discussions with the market participants. Therefore, any impact that we are seeing are not negative on market quality or market penetration. They are good ones which have been very thoughtfully done by the regulators after careful consultation. Overall, as far as the market is concerned, the market stabilized it after dipping it a bit. But as far as BSE is concerned, it was a northward journey because BSE was even more recent. While we are talking of derivatives as 25-year-old market in India, as far as BSE is concerned, the relaunch happened only 30 months before. Therefore, since it is in a catch-up phase, with whatever regulatory changes, it was helpful for BSE to establish a new principle and a new product and get ahead. So it was a positive journey for BSE. As far as the market is concerned, it was a stabilization journey.
Okay. And as you know, one piece, of course, is with regard to uncertainty around F&O regulations. Is that a concern for you? And what is it doing to trends within F&O? Because you've got such a good ear to the ground with regard to how regulation is impacting, practical trading and numbers. How is it impacting the volume trend? Give us a pulse of that.
See, I do not know what is the uncertainty we are now thinking about. I don't think there is any uncertainty. There is greater amount of clarity. If it is, say, a unilateral decision somebody is taking, they can tell you much in advance and then it can be executed on a particular day. Then there will be no novelty to that decision. But in our country, that's not the way we do regulation. As I said, we co-create. Therefore, when you discuss, things evolve. You start in some place, and when you discuss and then you get into it, it evolves into something else and then gets implemented. So I do not feel any uncertainty. Particularly with currently whatever I am seeing at SEBI, there is a greater amount of stability in thought process. There is a very progressive thinking as to how we should take the markets ahead, how we diversify and broaden the products. The interest is not on killing any product. The interest is not on prohibiting anybody from trading. It is about how awareness, how clearly protection all could be enhanced. So in the sense, I find it as a very, very positive atmosphere in which we are fortunately working up today.
Okay, great to hear that. And BSE, of course, 40 and raring to go. Mr. Ramamurthy, thank you so much for your time today. Great speaking with you.
Thank you.
Okay, that's the